Hey, what's going on, team? It's Ricky with Techbit Solutions. You guys know that as I started buying and selling, pretty much just flipping real estate properties here in the Arizona market with my business partner, Nick Palladino, we've been killing it. We just started during a very fortunate time, literally right before the pandemic. We saw that huge rally. We partook in that. And we even partook in really the rally early this year. I mean, in the first month of January, we already had 10 projects going on, right? Things have changed. And I wanted to make this video because not only have we talked about our successes, but I think it's very important for me to talk about my failures and also my areas of opportunity. And I hope that this video even just helps out one of you that maybe is considering selling a house and or potentially buying a house, just so you are aware of what is going on. We have a total of 8 projects going on right now. We had a total of 4 of them that were for sale. 2 of them have been under contract for the past 30 days. And now the same 2 that we've had under contract have now fallen out of contract. The first one was an individual. The second one was a hedge fund that ended up actually just canceling. I think it was 2 days ago. Very frustrating because they kept extending. I don't know if you've ever had this experience before, but we're set to close. We had our close date set on the 6th. And they're like, hey, we need to extend a little bit further back. They've done this 3 times. They extend it. And at that point, they're really just, I mean, if you're going to cancel. But the more that we are not on market, the longer or just overall opportunity cost is just such an inconvenience. And I began to do a little bit more research. And even in the month of July, which was even a couple of months back, it's probably even worse now. There's a reporting of, 15% of all homes that go under contract, meaning, there's a seller and then a buyer, they're under escrow, right? 15% of them have fallen out of contract. I mean, that's nearly, not fully set on that, but that's nearly 1 out of almost every 5 houses falls out of contract. And I think that's important and useful information for you to know. If you're a seller and you're thinking of selling your house, you don't want your house to fall under contract many, many times. So if you see that, the number of properties that are falling out of contract are increasing, then maybe you focus on someone or some of the offers that you're getting from someone that is for sure set to close, and or that you make your earnest money non-refundable, no exceptions. And that's something that we've learned based off of these 2 previous experiences, where I wish there was an incentive to even go under contract knowing that they could potentially cancel. Knowing that there's such a high cancellation rate right now, you want to make sure that you cover your ground, right? That you look out for yourself. So asking for a more aggressive earnest money or making it non-refundable hopefully just filters out the people that are not actually serious about making an offer. So I hope that saves some of you guys some time, but I wanted to share this video with you guys that I came across today, and let me know in the comment section what you think.
Confidence in the housing market is still pretty awful, but a growing number of people now think it's a good time to buy. Our Diana Olick has more. Diana.
Yeah, Sarah, confidence in housing has definitely shifted both quickly and dramatically thanks to that sharp jump in mortgage interest rates. The share of homeowners who think now is a good time to sell fell from 76% to 68% in June, that according to Fannie Mae. Just 20% of consumers think it's a good time to buy, although that's slightly improved from May. The biggest issue may be that more people are concerned they could lose their jobs now, and the share who think the economy is on the wrong direction, that hit a survey high of 82%. That may also be why more potential buyers are canceling contracts on homes they recently agreed to buy. Cancellations hit 15% in June, that according to Redfin, and that's the highest share since the first months of the pandemic, when home buying paused immediately, although quite briefly. Cancellations were at about 11% 1 year ago. Buyers are canceling for several reasons. Some are afraid prices will fall in the coming year and they'll lose money on their investment. Others are not qualifying for the loans at the higher rates, and still others may think that if the market cools a little bit, they can get a better house at a better price. Now, home builders are already seeing the writing on the wall. Their cancellation rates are slowly ticking up. Part of the reason why JP Morgan downgraded Lennar this morning, saying they remain cautious and less constructive on the sector as headwinds should persist and fundamentals have only just begun to soften. No surprise, the June jobs report showed a slowdown in construction hiring. Carl?
All right, so I mean, it's pretty simple to understand what it is that she's saying. I wanted to give you guys a real world example because sometimes it's hard to understand all those technical terms. how is it that people are, uncertain about the up and coming, potential recession? I think that's the biggest concern that everyone has right now. Interest rates are also rising. I wanted to show you guys an example of, why people might be less influenced or encouraged to buy a house, right? Let's use the average value of a home in the United States. That's going to be around $500,000. Right now, it automatically put me at 6.928%. I'm just going to pick a lower average, which realistically 6.9 to around 6.5 is probably not far-fetched, but I'm just going to use 6%. 6% of $500,000, that is nearly a $3,000 payment. If you think about where we were last year, interest rates were 3% on average, 3 to maybe 3.5, but same thing, right? If we go to 3% from this 6%, the thing that she said is people are scared that they're not going to be able to qualify for that same property because of higher interest rates. So what does that mean? Well, how much more expensive could it be? It's just 3%. Check this out. At 3% interest rate, the payment is $2,100 a month. $2,108. That means at 6% interest, this property would need to lose a total of $150,000 to have relatively a close enough payment to what we were at before a year ago. That means that whatever property on average that was worth $500,000 last year now has to be sold at $350,000 at 6% interest for the mortgage payment to be the same of the same $500,000 home that was sold last year at 3%. That is how much mortgage interest influences your overall monthly payment. And if you think about it and you do the math, I mean, it's about $900. That's nearly, I think it's like 44% of an increase on your mortgage payment from $2,100 to $3,000 pretty much. Think about that. A 44% increase on your mortgage payment. It's ridiculous, right? So it's not a surprise that a lot more buyers are fearful. Now, with that being said, if you don't want to buy a house, don't buy a house, right? One thing you must know is that if you do choose to buy a house, you could always refinance later down the road. So at the end of the day, if you can make up these payments for the meanwhile and you can get a decent deal, can you tolerate the time that it will take for interest rates to drop and then the market continue to rally? In my opinion, I don't think that the market's going to crash. Can I see a slowdown? Is it, less demand on the buying side? Of course, right? We're shifting from a seller's market to a buyer's market. That's no surprise. I'm not here to sugarcoat things, but if you're not actually in the market to buy a house, we got to look out for ourselves for those that are selling, right? So if you're thinking of selling your house, just understand that asking for maybe a more aggressive earnest money deposit and or making sure that specific contingencies that regardless of what they put, even a smaller dollar amount, is worth the idea of even going under contract. This is a new route that we're going to be taking and being more aggressive with making sure that we only choose and accept offers from serious people, right? We used to accept anyone was getting accepted at 3 to 3.5 interest rates a year ago. Things are changing, not just for buyers, but for sellers as well. And I'm here to talk about both sides. I mean, even on the buying side, I just bought a new property for myself. Right now, it's a great time to get killer deals. Anytime that demand is low, selling, the overall selling market right now, inventory is high. So if properties begin to sit on market for quite some time and you come in with cash or you come in with a reasonable offer, you can get a huge discount, 10, 15, 20, 25% off of their ask price. I got 15, if not 18% off of my ask price for the house that I ended up buying. My house, again, the one that I ended up buying, was originally listed for about $1.6 million. I offered $300,000 below ask, and my offer got accepted. People sometimes get offended, right? I don't care, right? We're all adults. You either accept my offer or you don't. I'm in the numbers game. And that's what you need to understand on the buying side and on the selling side. I want to protect myself on the buying side. I want to protect myself on the selling side. And that's all we can do. Try to be proactive in understanding both sides and making sure that we work with people that are ready to make a deal happen. And just wanted to make sure that I keep you guys up to date with not only the good, but of course the bad, the areas of opportunity. We have 2 properties that fell out of contract recently. It sucks, but again, these are challenges that I'm excited that we're learning to overcome because we've been so, I want to say, what's the word that I want to use, especially for like the past year. It's been so easy for the past year to a year and a half because of how bullish the market's been. Now we have to work for these flips. And I'm glad, right? Because now during a down market, I get to learn the ins and the outs of working during an uncertain time. And like we say, always looking forward to the next challenge. So I really do appreciate you guys' time. Friendly reminder, we're always looking for deals in Arizona. So if you are interested in selling your house and or if you have a friend, family member, or neighbor that's interested in selling their house in Arizona, send me a direct message and my business partner, Nick Palladino, on Instagram. They're going to be linked down below. It's the first or second link down below. Send us a direct message, what you're willing to accept. We're cash buyers. There's no middleman. We don't ask or have hard money lenders. I pay cash. We close quick, especially if you're trying to get rid of the property sooner than later. So I really do appreciate you guys' time. Hope that it earned a thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. Take it easy, team.